Hey everyone, welcome back to Corporate Decoder, the place where we dive into company filings and somehow find the most boring stuff to talk about. Get ready, because today we're dissecting the US government money market portfolio's latest shareholder report, which is packed with more numbers than a magician's rabbit hutch. This report gives us a look at how this money market fund performed over the past year, and for anyone interested in where their money is going, this is your peek behind the financial curtain. Let's get straight into the nitty-gritty. This report is for the US government money market portfolio, and it covers the period from July 4, 2024 to June 30, 2025. It tells us all about the fund's investments, its performance, and its costs. First up, let's talk about costs, because nobody likes unexpected bills, right? For a hypothetical $10,000 investment in this fund, the costs for the last year were just $15. That's a tiny 0.15%. For a senior 0.15%. For a money market fund, this is pretty standard and very low, meaning most of your money is working for you, not being eaten up by fees. Now, for the big picture numbers, as of June 30, 25, the fund had a massive $10,994,095,771 in total net assets. That's almost $11 billion. It held 93 different investments, and the management fee paid out over the year was about $15 million. Again, for a fund this size, that management fee is quite reasonable and reflects the overall low-cost structure we saw earlier. The report also gives us a fantastic look at where this massive chunk of money was actually invested. The pie chart shows that a whopping 75.5% of the fund's investments were in US government and agency securities. The remaining 24.5% was in repurchase agreements. This is exactly what you'd expect from a fund named US Government Money Market Portfolio. Its focus is on super safe government-backed assets. Diving into the specifics of the schedule of investments is like looking at the fund's grocery list for the year. We can see investments like Federal Farm Credit Banks or FFCB with varying interest rates and maturity dates. For example, there's a FFCB investment with a 4.234% interest rate maturing on July 9, 2025. That's a snapshot of millions of dollars being lent out. Then we have Federal Home Loan Banks, or FHLB, investments. One of these had a 4.1% interest rate and matured on July 1st, 2025. These are all short-term, very safe instruments that are the backbone of any money market fund, especially one like this that aims to preserve capital. And of course, US Treasury bills are a major holding. We see one with a 4.16% interest rate maturing on July 1, 2025. These are considered among the safest investments in the world, backed by the full faith and credit of the US government. The total US government and agency securities held amounted to over $8.29 billion. On the other side of the ledger, we have repurchase agreements, or repos. These are essentially short-term loans where the fund gets cash and the borrower provides collateral, usually government securities. The report lists several of these, like one with Bank of New York Mellon Corp for $400 million collateralized by US Treasury notes. These are crucial for providing liquidity to the market and earning a little extra yield. The total in repurchase agreements was close to $2.7 billion. When you add it all up, the total investments cost over $10.97 billion. The vast majority of these, almost 100%, were in US government and agency securities or repurchase agreements backed by them. This confirms the fund's conservative strategy. Moving on to the financial statements, the statement of assets and liabilities gives us a snapshot of what the fund owns and owes on a specific day, June 30, 25. Assets include those investments in securities and repurchase agreements we just looked at, plus a bit of cash, and some receivables like accrued interest. On the liabilities side, we see things like management fees payable, professional fees, and other accrued expenses. Total liabilities were just over $1.3 million. This is incredibly low compared to the fund's total assets, which is a good sign. This leaves us with the net assets, which stood at a massive $10,994,194 civility of the fund after all its assets and liabilities are accounted for. And importantly, the net asset value per share was exactly 1 as expected for a money market fund aiming for stability. The statement of operations shows us how the fund performed over the entire year. Total investment income primarily from interest was over $472 million. Expenses including those management fees, custodian fees, and professional services totaled around $15.4 million. This resulted in a net investment income of over $457 million for the year. That's what the fund earned from its investments after covering its operating costs. The statements of changes in net assets really tell a story about the fund's activity. For the year ended June 30, 2025, the fund saw a decrease in net assets of over 503 million liras. This was mainly due to distributions to shareholders and capital share transactions, meaning more money went out of the fund than came in. At the beginning of this reporting period, the net assets were over $11.49 billion, and by the end they were around $10.99 billion. So there was a net outflow of capital. The notes to the financial statements are where we get the finer details. Importantly, the fund values its securities at amortized cost, which is a common practice for money market funds and is meant to approximate fair value. This approach helps maintain a stable net asset value per share. Regarding those repurchase agreements, the fund treats them as loans collateralized by securities. They ensure the collateral is always valued at least 100% of the loan amount, with daily mark-to-market adjustments to keep that collateral coverage strong. This is a key risk management practice. On the tax front, the fund aims to qualify as a regulated investment company, distributing most of its taxable income and gains to shareholders to avoid paying taxes itself. Good news for the fund's operational efficiency. When it comes to fair value, this fund's investments are generally valued using level 2 inputs. This means their values are based on observable market data, such as interest rates or quotes for similar instruments rather than the fund's own internal assumptions. Since money market instruments are often valued at amortized cost, which isn't a direct market quote, they fall into this category. And as with any financial report, there's an independent auditor's opinion. PricewaterhouseCoopers LE audited these statements, and in their opinion, the financial statements present fairly in all material respects the financial position and results of operations of the fund. They've been auditing Franklin Templeton funds for a very long time, since 1948, which adds a layer of comfort. Finally, the tax information section provides details for shareholders. It breaks down the fund's income in terms of qualified net interest income and interest earned from federal obligations. This is important for shareholders to accurately report their investment income on their personal tax returns. Overall, the US government money market portfolio appears to be running exactly as it should, conservatively with a focus on safety and low cost. The slight decrease in net assets suggests that investors might be moving their money to other opportunities, perhaps seeking higher yields elsewhere, or simply rebalancing their portfolios. However, the fund's core function, preserving capital and providing a stable, albeit low, return seems to be executed faithfully. The fund's investment in government securities and repurchase agreements, with a strong emphasis on collateralization, highlights its commitment to minimizing risk. The extremely low expense ratio is a major win for investors, ensuring that most of the returns generated go directly to them. The slight decline in assets under management isn't necessarily a red flag for a money market fund, as these types of funds often see flows in and out depending on prevailing interest rates and investor sentiment. The main takeaway here is stability and safety, which this report strongly reinforces. It's doing exactly what it's designed to do. Alright, that's our breakdown of the US government money market portfolio's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.